What if I told you that one bank managed to serve intelligence agencies, drug cartels, dictators, terrorists, and ordinary families all at the same time? And for nearly 20 years, almost nobody stopped it. This is the unbelievable story of the bank that looked completely legitimate while secretly becoming one of the largest financial crime machines ever created. When people think about banks, they imagine security, regulations, and trust. After all, the world's largest financial institutions are constantly audited, monitored, and supervised. Or at least, that's what we're told. But history proves something uncomfortable. Sometimes a bank doesn't fail because of bad investments. Sometimes the bank itself is the fraud, and no case illustrates that better than BCCI, the Bank of Credit and Commerce International. What started as an ambitious international bank eventually evolved into a financial empire built on deception, hidden ownership, fake accounting, and global money laundering. Its collapse shocked governments, destroyed billions in wealth, and forever changed how financial crimes are investigated. The story begins in 1972. Pakistani banker Agha Hassan Abedi had a bold vision. Instead of building a traditional bank, he created something that operated almost like a financial maze. On paper, BCCI looked international, modern, and successful. Behind the scenes, however, it was intentionally designed to confuse regulators. Rather than keeping operations under one legal structure, the bank spread its activities across dozens of companies in multiple countries. Transactions were split into small pieces. Ownership was hidden behind layers of corporations. Money constantly moved across borders. The result? No single government had enough visibility to understand what was actually happening. By the time investigators connected one piece of the puzzle, the money had already disappeared somewhere else. In short, imagine trying to solve a jigsaw puzzle, except every country owns different pieces, and nobody knows what the final picture should look like. A complicated structure alone wasn't enough. To become truly untouchable, BCCI needed influence. And influence was something it acquired remarkably well. During the 1970s, the bank quietly expanded into the United States. Instead of openly buying American banks, it allegedly used hidden ownership structures and politically connected individuals to gain control behind the scenes. This gave BCCI access to one of the world's most important financial markets. Its reputation grew rapidly. By the late 1980s, BCCI operated roughly 400 branches in more than 70 countries. Around 1.3 million customers trusted the institution with their money. But those customers weren't limited to ordinary businesses. Investigations later linked the bank to an astonishing mix of clients: drug trafficking organizations, corrupt officials, intelligence operations, political elites, and even individuals connected to future terrorist organizations. For criminals, secrecy was valuable. For governments conducting sensitive operations, it could be useful too. That combination made BCCI extraordinarily difficult to challenge. Eventually, a handful of investigators began noticing suspicious money flows. One of the earliest was attorney Jack Blum. He spent years uncovering evidence of international money laundering and hidden financial networks. But instead of receiving widespread support, he often encountered resistance. Some agencies showed little interest. Others reportedly failed to cooperate. Important evidence was difficult to obtain. For a while, it seemed the investigation would simply disappear. Then everything changed. New York prosecutor Robert Morgenthau entered the case. Unlike many before him, he refused to let it go. His team slowly connected evidence gathered across multiple countries. Every new document exposed another hidden company, another secret account, another layer of deception. Then fate intervened. In 1988, founder Aga Hassan Abedi suffered a serious heart attack and stepped away from managing the empire. Without its central architect, BCCI became increasingly unstable. The carefully balanced system began falling apart. Investigators finally gained the momentum they needed. Sometimes the biggest criminal organizations don't collapse because investigators become smarter. They collapse because the people holding everything together disappear. In 1991, prosecutors officially charged BCCI and several of its leading figures. Investigators alleged that approximately $20 billion had vanished through fraudulent activities and hidden transactions. The bank ultimately collapsed. Millions of customers faced devastating losses. Governments launched investigations across multiple continents. Court battles continued for years. As more evidence emerged, it became clear that BCCI wasn't simply breaking banking rules. Its entire business model relied on deception. The institution had concealed enormous losses while continuing to attract new deposits. In many ways, it resembled a massive financial pyramid that depended on fresh money to survive. Robert Morgenthau later described BCCI as the largest banking fraud in financial history. Whether or not every expert agrees with that exact wording, its scale permanently reshaped how regulators viewed international banking. We draw a logical conclusion. One collapsed bank forced the entire financial world to rethink how the banks should be monitored. The scandal exposed a painful truth. Financial crime doesn't always happen in dark alleyways. Sometimes it happens inside luxury offices, behind polished logos, and under the protection of respectable institutions. The BCCI disaster became one of the strongest arguments for tougher anti-money laundering laws. Governments expanded international cooperation. Banks faced stricter reporting requirements. Financial regulators began sharing information across borders far more aggressively than before. No system became perfect, but ignoring global financial crime was no longer an option. So what made BCCI different? It created an intentionally confusing global corporate structure. It gained influence through powerful political and financial connections. It became a preferred institution for moving illicit money around the world. Years of determined investigations finally exposed the fraud. Its collapse transformed international financial regulation. If you enjoyed uncovering one of history's most unbelievable financial scandals, make sure to subscribe because there are many more hidden stories that changed the global economy forever. And here's a question for you. Do you think a scandal on the scale of BCCI could still happen today? Or have modern financial regulations made something like this impossible? Let me know your thoughts in the comments.